If you've been to the grocery store recently, you have seen sky-high beef prices, insane coffee prices, rising corn prices, and most notably, borderline extortionate egg prices. Thanks to a nasty bird flu outbreak, one that killed 20 million hens in the fourth quarter, the average price of a dozen eggs in this country is $8.11. That's nearly triple the 10-year average. No wonder people are upset about inflation. I bring this up because last Wednesday, Brett in California called in to ask about a company called Vital Farms, which is a pasture-raised egg producer. And I said, I got to do some more work on this thing. I decided to wait for the company to report. Now that we've seen the earnings this morning, the stock's, well, it's getting hammered. It's down 9% today. Good that I waited. So what do we do with this egg producer? Vital Farms came public in 2020 at $22 per share. But the stock quickly shot up to the low 40s in its first couple of days of trading before spending the next couple of years going steadily lower. This thing finally bottomed at $7 and change in mid-2022. Even by the end of 2023, it had only bounced back to 15. But then, last year, the stock caught fire. Vital Farms surged to $48 last summer before pulling back to the low 30s as of today. This one caught fire because it was a genuinely great growth story. Nobody cared about growth in 2022, right, or most of 2023. But by last year, the whole group came back in style into Wall Street and suddenly learned they learned how to appreciate skyrocketing earnings numbers again. And make no mistake about it, Vital Farms has been a growth machine.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.